Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. I'm very pleased to have Jeff Koenig with me here today. Jeff provides fractional CEO and CFO strategic planning services to small businesses from pre-launch to exit. He also offers executive education, an executive education program and lab series in strategic financial planning, and prolifically invests in alternative asset classes. As you can see by his backdrop, he is the current board chair of the Desert Angels investing group, and we can start by talking largely about that. Welcome to the show, Jeff.
Thank you for having me, Tim.
All right, so for people who don't know what angel investing is, maybe you can start with what it is, and then you can talk about how you got into it.
Yeah, happy to. A lot of folks have heard of venture capital in general, which often overlaps another term called private equity. And these are investments in companies that are not public. They can be early stage, they can be startups, or they can be, rather old businesses that, are medium sized with hundreds of employees that just turn out a great profit that private equity owns. Where angel investing fits in that deep capital stack is at the seed stage. The seed stage is normally startups that have developed a prototype that works, and they are either getting very close to or just after launching and gaining first sales. In most all sectors, except for life sciences, that kind of runs on its own track, and seed investors tend to invest when companies have scientific data that indicates promise, but that are still preclinical. So seed investors at that point are interested in taking the company forward with capital from having been largely either grant funded or founder funded to that point, with $1 or $2 million in a round, to get them to a place where they're ready to scale sales. And that's then where venture capital or private equity tends to come in, and with larger checks to fund the company to get it to what we're all looking for, which we call the exit. And that's the liquidity event, at which point our capital comes back to us.
Can you break down a little bit more about what happens after the seed round before exit? Depending upon the endeavor, I imagine there's different rounds needed potentially.
Yeah, absolutely. In fact, if you follow any kind of venture capital news on the mass market news media, you may hear about large companies like a ride sharing platform, or a software company that's raising its Series E or its Series F. So seed stage investors, commonly are investing in Series C. Then you go to A, B, C, and so on, and the rounds get progressively bigger at higher valuation, depending on how long that company needs to keep going before it finds the acquisition. So yeah, after us, typically is venture capital or strategic capital from a potential acquirer, and you just proceed on through the alphabet.
Okay, and how did you start in venture capital and angel investing?
Yeah, I don't know how most people start. For me, it was an accident. I was living in about a 50,000 person town, running a couple of businesses, and the economic development director there said, "Hey, you want to help me start a chapter of an angel group, from the big city down the highway?" And I said, "What's an angel group?" So I had no idea what it was, and here I had owned and operated a dozen small businesses, and
did you ever bring in? Sorry, did you ever bring in external capital?
No. Okay. All of my businesses were self and partner funded, so we never had to seek that outside capital. And truth be told, those businesses are what we call lifestyle businesses, locally owned and operated, and not necessarily looking for a quick exit. Venture capital and of this type is very narrow. Out of the 1 million businesses that are started in America every year, maybe 50,000 of them seek this kind of capital, and 10% or less actually gain any. So it's a very narrow segment. And so that's why I had never heard of it, because I never needed to raise it myself. But, as I jumped in and went to a meeting and saw a couple of pitches and sort of got my feet wet, and I kind of looked at the folks around me, and they were asking questions about the product and, the customer base and things like that. And I'm like, folks, we're writing checks, we're investing money. Why aren't we talking about returns? Where are the financial questions? So I fell into that hole. I started asking all of the finance questions. And the more I dug in, the more fascinating venture capital finance became to me.
Okay. And obviously you enjoy it. You seem to be focused largely on that now.
Yeah, in fact, a lot of what you mentioned in the introduction, which I still do for an old book of clients on occasion, has really kind of been pushed to the side, and I'm spending most of my time now either investing in real estate or investing in early stage startups.
Okay. Are early stage startups considered alternative, or are they just their own class?
I mean, there's certainly a distinct subcomponent of alternative
Of
investing,
private, but yeah.
yeah, really alternative is anything that's not public. So not your 401k, IRA, stocks and bonds, it's everything else.
Okay. Okay. And so why do you focus on alternative investments?
Well, so, most folks who have any kind of investments at all, and I think that's roughly half of the population or a little less, are going to do it chiefly and only through retirement funds. So they're only getting exposure to public stocks and bonds, which is great in the up years, right? But when there's a down year, that's kind of stressful for folks. And one key to good asset building and asset management is having things that move counter to one another, right?
Right.
Real estate has often been seen as a hedge to the stock market. Bonds are supposed to be a hedge to stocks, but lately have kind of been going in the same direction. So, it's good to have some hedge against the public markets. Early stage startups, I found since I've been doing this for the last 7, 8 years, tend to be very even. They do not tend to follow what's happening in public markets at all, because these companies are way earlier than institutional money that moves public markets. So there's, in a way, although it's high risk, and everyone who gets into it needs to understand that, and angel investing, you're going to get zero back on most of your investments, but the ones that hit are huge. 10x returns or more, and that makes up for the rest. So it's important to build a portfolio of angel investments, but then as a portfolio, it will run very independently from public markets. So it's a good way to hedge your overall balance sheet.
Right. And from my understanding, I'd like to also add that I think alternative investments in the realm of smart investors or industrial or institutional investors rather, it's not really alternative anymore. It seems to be the mainstream option, right? Like the Yale Endowment and other stuff have a minority of their stuff in public or traditional asset classes, and alternatives make up the majority of it, which makes it not really the alternative anymore.
Yes, endowments, large pension funds, things like that do dabble somewhat outside of the public markets as a hedge, because they can bring large minimums to the table. They tend to invest in, they're huge institutions investing in other large private equity and venture capital firms. They're not writing $10,000 checks to startups. They're investing millions of dollars in a fund, and somebody else is managing that for them. So they don't really understand the asset class per se, except to put 4, 5, 6, if they're really aggressive, maybe 10% of the portfolio into it. But their wealth manager that manages all the stock and bond trading is managing the private equity part of their portfolio as well.
Okay. Okay. You mentioned check sizes. Angel investors, venture capital groups, they fill a specific niche for this. Like you said, certain big institutions aren't going to be writing the check sizes required by some of these new endeavors. Can you speak a little bit to the size range and the what you're looking for in partners at that level?
Oh, absolutely. Yeah. In fact, that's what makes this so interesting and so accessible to folks. So, first, to get involved in this, you have to be an accredited investor. And that is simply a statutory definition that you self-certify to. There's no test you take. There's no, license card that you acquire. It's just
Although,
having.
although there might be, right?
Well, yeah,
They
there's
talk about
always,
that.
threatened legislation. Treasury loves to get their fingers on everything, but for the moment, the big beautiful bill that was just passed did not have any significant changes to the detriment of investors. A couple of things that actually improved being in this asset class. So we're good for now, but the accredited investor definition is $1 million of net worth, not including the equity in your occupied home. Or $200,000 in income, 300,000 including a spouse. So if you meet either of those definitions, you can get involved in this asset class. Now that definition, it really has not changed since 1978, 79. So it has not moved with inflation. It should be closer to about $2 million today. So it's a good time to get involved if you meet the definition before, stuff does change. In most angel groups or even investing on your own, check sizes as small as $10,000, sometimes even $5,000 will get you into an investment in a startup stage company. And I always, recommend folks that are interested in getting into this, never earmark more than about 10% of your investable wealth in this asset class. And that's getting towards it over years. Okay. Not in a year. That's 5, 6, 7 years of building a portfolio, just getting to 10% max. And don't write, a big check to a company right up front. Write a small one and then see how they progress. And if they're, worth continuing to invest in the next raise, and follow on with them. So sort of reserve funds for a company and make sure that they're making progress as you go.
Right. And what's the range of check sizes that those companies and startups are looking for?
Well, they understand that, the angel investors are writing 10 to 25, $50,000 checks. I think the average check size is $15,000. And they're, they may be raising $1 million, $1.5 million, $2 million. And so they know that they're going to approach a group like ours. Many of our members will bring $300,000 to $500,000 together from our group and then help them syndicate it, or it's being syndicated to us, to other angel groups to, collect those checks together until they can fill the entire round.
Okay. So does Desert Angels, for example, just create their own fund and invest all together?
So it's important to understand about angel investing is that it is largely unregulated. We're called exempt. So I don't have to get a Circular 7. I don't have to get any kind of license. None of us do. We're all volunteers in a membership group. It's kind of like an investing club.
Right.
And so on that basis, we don't make investing decisions for each other. We each have to make our own on a per deal basis. So we don't use funds. We just collect checks together essentially and aggregate that money on a one investment at a time basis. And so there's a lot of freedom. There's a lot of independence, even liberation, if you like that term. And there's no peer pressure. There's that's frowned upon. So we work together to study a deal, but then we make our decisions independently.
Okay. Well, we do that as well for our stuff. I'll provide the deal metrics and the story, and then share the operators, and we'll have calls together and everything. And whoever wants to participate in it, we can combine all of our investments into a single fund. It's not a blind fund anyway. I'm not licensed either. I'm not making the decisions for them, right? But they make the decision, and we still do a fund model, so we get improved economics, right? The bigger check, you can negotiate better terms. And I was
yes, common in real estate and appropriate to have an LLC to put that together. It's more tax efficient, especially with certain types of real estate write-offs. With angel investing, we have found that combining into SPVs, we use a different term, special purpose vehicles, LLCs, has actually become an administrative and tax burden.
Huh.
And so we're trying to get away from sidecar funds and follow-on funds and SPVs and convince founders that it's in their best interest to allow us directly on their cap tables for our check sizes. They are generally C corporations, so we don't want to have to, insert a tax return when it's unnecessary.
Right.
And that's, in our case, that's what an LLC does. So we're trying to get away from that actually right now.
Okay, interesting.
Yeah.
And you can have them be flow through, entities. It depends, but wow, yeah, that's interesting. Thank you. What are some common misconceptions about angel investing?
Having been a member of many and now, having been in management for a while, the biggest unexpected and really unnecessary hurdle for new angel investor members is this feeling of intimidation. They think that they somehow don't know enough. They listen to the questions from other subject matter experts in the room who come from different career backgrounds and things. Oh, I would have never thought about that question. That's a great question. Wow, I just don't feel like I belong here. I don't know what questions to ask. It's a total misnomer because none of us is an expert in all of the areas of risk analysis that angel investing requires. But all of us have expertise in something. It could be marketing, it could be product, it could be IP law, it could be regulatory, it could be management and people. If you have done well in a career and gotten yourself to the position of an accredited investor, you didn't get there by being an idiot. So you know something, you're good at something, and whatever it is that is your expertise is valuable and useful to the group. So I really just try to encourage people that are relatively new to this, don't sit back in the background, stick into the wall, don't be silent. Whatever question comes to your mind for the company is going to be what somebody else goes, wow, that's a great question. I would have never thought of that. So just
Right.
jump in. Don't be afraid.
That's the power of being in a group as
Yeah.
well. So
Yeah.
that's great. You reminded me of one of my investors who he invested in a number of different biotech startups, right? And has done very well. And so now he invested in more, but his criteria vary, right? Like he said, oh yeah, I put in $250,000 into this particular project. I don't think it's going to go anywhere, but I like it because it's a scholastic thing on a topic he cares about, right? Or I know somebody else who invested in a guitar company just because he liked their guitars. He had no idea if the business plan was gonna, right? But he was just passionate about what they do and the people involved. So, which isn't necessarily a fiscally responsible approach, but there's a range anyway. I was just trying to add on that different people are driven by different things.
Well, and money's relative, right? I mean,
Yes.
just add zeros. So the issues are always the same. But, if you're somebody that, is a very high net worth individual, with $100 million, then yeah, $250,000 is pocket change to you. And yeah, you're just having fun. You're within your 10% threshold,
Right.
right? That's not me. In fact, I would say 90% of Angel Group members are not very high net worth individuals. I would say 90% of us have the total net worth average between $1 and $3 million. So
Okay.
yeah, you're not walking into a room where you're just going to feel completely outclassed. We are basically upper middle class folks who, instead of spending everything we earned, learned early on the value or the wisdom of it's not what you make, it's what you keep. And so
Sure.
now we have something to invest.
Would you say people, when they get up to like the 20 to $50 million net worth range, they start having their own sort of maybe multifamily office or some sort of their own private structure?
Certainly, yeah. I mean, forming a family office or foundation makes sense at as little as $10 million of net worth. And so once you cross into that area, you don't want to, it's too much work to do, to write 10 and $25,000 checks. So you want to get some professional staff, you want to be writing larger checks into funds of others who are professionally making those decisions. And so, yeah, that's just a different level of the ball game.
Okay, great points. Great points. Thank you. So, Jeff, biggest challenges as an angel investor you've had to overcome?
Well, the biggest challenge that we're all facing right now as an ecosystem is that the baby boomers really got this train rolling. They were organizers, they were association creators. That was their superpower. We have a societal problem or a societal need. We get together, we form an association, and we make rules, right? Baby boomers were fabulous at that. Well, they're aging out. Half of them are now retired from their professional careers. The other half will be in under the next decade. And they were a huge generation. I'm an old Gen Xer. Gen X, there's a third fewer of us. Go, right? A third fewer of us. And at our relative age compared to our baby boomer parents or uncles and aunts, we have less net wealth per capita. So when you consider that massive contraction, how do we keep this going at the level that the boomers did? Statistically, we can't. Now, we could if we attract more Gen Xers to the activity, because still most people never know about it. They never learn about it. But because of that generational transition and generational shift, a lot of angel groups are under pressure. They're shrinking in body count and dues collections to pay for operations. Some have closed up. In fact, my original Mid-America Angels used to be a Midwestern powerhouse, shut down last year because of this transition. And so we're seeing consolidation where we're going to have fewer groups, and the ones that survive are going to be larger unless we can attract more people to this activity and teach them about it and they enjoy it. So, that's part of my job as a board chair these days, is telling the community that, hey, this isn't just, wealth management, it's fun. And it's a way for you to give back to the economy that supported you through your career, helping, younger people with a business idea that could shoot the moon. If you're interested in finding out, Desert Angels is a national group. We've got members from coast to coast, and we invest in deals from coast to coast. So, and we do it all remotely. You don't have to travel. You can do it from your own home office. So get in touch with me and I can show you the ropes.
Okay, excellent. So Jeff, if people wanted to learn more about Desert Angels, where should they go? What can they do?
Certainly, we have a website, desertangels.org. Don't type the www because there's some kind of routing issue that we run into. Yep. So just HTTPS and then the desertangels.org, and there's plenty of information to read out there about it. I'm pretty easy to get in touch with. You can find me on LinkedIn. You can also contact me at chairman@desertangels.org. And I'm responsive. I even answer voicemails, which many people don't anymore. So, but yeah, if you're interested, let's have lunch or let's get on a Zoom call and ask your question.
Okay, great stuff. Thank you, Jeff. So, is that one of the biggest goals for, speaking of the Desert Angels group? Is that one of the biggest goals right now? Is just to grow it?
Yeah, externally, it's to not just find any member, but specifically find the kind of member that wants to give 4 to 5 hours a week to this, and actually help, screening and doing the diligence and the post-investment management of the portfolio. It's an active hobby. It's not something where, you're going to just come in and then everybody else is going to do it for you. You need to be a part of it. So if you're hearted that way, if you like to roll up your sleeves and dig in, that's specifically who we're looking for. And you should have an investment horizon beyond 10 years. So, if you're in that part of your investment horizon where you're investing in safe bonds and looking for cash flow, you're probably a little bit beyond where we're looking to be right now. We want to find a lot of 40, 50 somethings that still have some investment horizon ahead of them, that are accredited investors. And that's external. Internally, we've gone through a huge set of changes this year. changing our operations, using new software tools, doing things to make the process more efficient. The boomers were very conversational. They just liked to get in a room and hash stuff out. Us Xers like to use a little bit more technology to help us look at data and make decisions. And so we've been making those changes internally. And it's brought already a great amount of savings in how much time the activity actually takes.
Okay, that's great. That's great. And how about personally, biggest goals for you in like maybe 2025 and the rest of the second half of the year here?
To stay away from doctors and hospitals. No offense to doctors and hospitals, but the business side of that industry is a train wreck right now. I hadn't been to one for several years, and then I got this little case of shingles, and I go to the urgent care, and oh my God, dealing with the silly $300 bill for 8 weeks was just insane. You know, so how do I do that? My goals are stay healthy. I want to be on the trails, riding my bike, hiking, doing my kickboxing workouts, acting younger than my age, and that's how I stay out of the hospital. So yeah.
Okay. Awesome. Yeah, that's as the more growth-minded people I hang out with, that's a big part of it, right? They're successful physically and financially. They're active, right? And they keep learning in that front. So that's obviously, health is obviously a huge priority. What's the saying? The healthy person has 1,000 goals, but the unhealthy person has one.
Yeah, and it is unfortunate. I mean, I used to be involved in some advocacy in the health space and go to DC and try to help these folks understand that we've got to get America healthier, right? And so much of our medical care system is devoted to chronic illness that's preventable. And anybody in that space knows this. I mean, this has been, we've known this for decades, just watching the annual obesity statistics march up. So I honestly, I could not keep up intellectually with the work that I do today if I physically wasn't healthy.
For sure.
And so yeah, getting out there, enjoying this Arizona nature. We love to overland and boondock. We love to overland camp as well and go up to the White Mountains or go to Prescott or go to the North Rim and just get away, be under the trees. And I'm still sitting there with Starlink, on doing my investment, analysis. Awesome. So yeah.
Excellent. Yeah, it's people who are high performers really keep track of their sleep, their activity, right? Their exercise and what they eat. And it's that's the trifecta, really. It's so important, maintaining the energy required to do this.
Yep, fruits and supplements right here.
Excellent. All right. Well, Jeff, you mentioned how to learn more about Desert Angels, but if people would like to connect with you directly, what can they do?
Yeah, LinkedIn's a really easy way, just because that's the business network, right? You can find me at Jeff Koenig, pretty easy to find. But yeah, if you reach out to me at that email address, chairman@desertangels.org, we can connect that way as well.
Okay, great. This has been awesome. Thank you very much. Thank you everyone for listening and watching. Thank you, Jeff Koenig, for joining me today. We appreciate you sharing your insights into investing, venture capital, angel investing in Arizona. And are you guys worldwide, or is it just national?
Right now, we focus on U.S. and Canada. We are building software to potentially do international investments in the future, but transfer of payments, banking, that gets very arduous there, and I'm not an expert in that, so I would need to find some people who are first before we dive into foreign companies. But there are some good ones out there. Europe has a very active angel investing network. Southeast Asia has come along. Australia. So, if you want to do this internationally, the potential is there in the future.
Awesome. Very cool. Thanks again. Thanks for sharing everything.
And of course. Thanks for having me.
Inspired by our guests? Visit PhoenixProsperityPodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.